Alright guys, welcome back to my financial part of the channel. If you're new here, my name is Amir Malik. I'm a medical graduate and these are a bunch of videos I'm starting recently where I'm going to be sharing my financial track with you guys. And obviously if you feel like you want to join me and tag along, then go ahead, or just watch and learn, see what I'm doing and get a better grasp of what my opinions are on the stocks. So, as many of my medical student followers know, back in college I was a math major. I've also done a lot of research in mathematic things, and lately I've been investing a lot. So I want to talk about that. Um, in one of my other videos, I've spoken about how I got to the place where I'm at now, and then in this video, I want to talk about what I'm going to be doing now, starting from today, and share that with you guys before I even do it, so that you can go ahead and see what it is I'm talking about, what I'm trying to do, how I'm going to do my research, which is what I'm going to actively show you guys right here, how I'm going to gather data, and then how I'm going to go ahead and apply it. So what I did yesterday was that I sold the 6 shares of Tesla I had. Right, so it was at 6.45 when I sold it, and the reason I sold it was because I had bought it quite a while ago, before it did the split, and I bought it at around what would be considered 500 a share. So it was a good profit margin for me to grab and reinvest elsewhere. And on top of that, I feel like if it ever dips again and maybe goes down to around 600 again, I'll pick up a couple more before it comes back up. So that's always a nice little strategy right there. What I wanted to do was reinvest a lot of that money into now dividend stocks. So what you're seeing here is on the top left, I have my Robinhood account, where over a span of a year, mostly 2020, I've invested every 3 months or so another 5K into various stocks. And on the right side, we have webull. This is another app on the phone as well, where you can also, similar to Robinhood, trade stocks. But what I like about webull is that the data that webull provides is much more extensive. As you could already see, there's a lot to take in over here. But that's kind of what you want once you're at that point. You want to be able to see things as different lists. Maybe you're interested in who the top loser accounts are, the stocks that have lost the most, so that maybe you can pick it up before it comes back up. Maybe you're interested in the top gainers just for your own research purposes, so you can understand what kind of stocks are gaining, because you have to remember that if stocks are going up, it's like businesses are going up, and you want to understand what kind of businesses would be going up depending on the time period that you're in. Like for example, right now, Christmas is approaching, so a lot of people are going to be traveling. There's also going to be a lot of online shopping, a lot of hotel booking. So those are some businesses whose stocks might be going up. And in fact, I have purchased a lot of, in anticipation of that, I had purchased a few Delta Airlines and American Airlines stocks, who have all gone up ever since I first purchased them. Right, so that's one thing I did for my own investment portfolio right there. Now, what we're going to be looking at today are some of these dividend stocks that I have a list of right here. So in my webull account, the reason I use webull is because of what you see right here, the key statistics. Right, so on the phone, on the mobile app, it looks pretty similar as well, except this is going to be right here, and you just click on the drop down, and then this is the key statistics that would fall down. So when you're looking at the key statistics, of course, there's a lot to take in, right? So let's take a look at what's happening in here. The list of all of these guys over here, and there's a couple more that I haven't put on the list. These are the ones I was currently interested in, and then I'm going to talk about a few more that I have on a separate list in my Robinhood. But this information of like who are the good dividend stocks to buy, you can find that anywhere online. You can Google top dividend stocks. You're going to hear about dividend aristocrats and so on, dividend kings. Those are all stocks that have been successfully paying dividends for the longest time. Some of them for 25 years, some for 50 years, and a lot of them have also been increasing how much dividend they've paid every time they've paid. Right, so dividends are basically money that stocks give back to all of their shareholders. Right, it's one of the 3 things they can do, and this is the one we care about in this video. The other 2 things are irrelevant, and they can do those things with their money too, which is like reinvesting into themselves or investing it into other things. But most stocks that I'm going to be talking about are stocks that don't have anything to reinvest into, don't really reinvest into themselves, and majority of them are already so successful that they just are making a lot of money and they give it back to their stockholders, right? So over here you can see, of course, some of these are going to be pretty obvious, like open and high, right? So it opened at 545 today, and that's the highest it's been. It hasn't gone up, right? It's the lowest it's gone to is 541, and currently, it's looking like it's at 542, and that's kind of what it closed at yesterday. Right, other than that, what we care about for today's video, because I'm going to be compiling a table on the bottom left over here, is the dividend information, right? So you can see here it tells you dividend is 0.72. Dividend yield is 13.28%, which is a pretty big percentage. And the last thing we care about is the ex-div date, which is December 30th, 2020. So what do those three things mean? So let's put that in here first, because that's the data I was going to put together today. When I was going to sleep last night, I figured to myself, this is what I'm going to do, because yesterday I sold Tesla, right? So I had a lot of money to reinvest. I've actually started a transfer of 5K into my Robinhood. That's going to be my fourth transfer this year to put an end to 2020. And one of the reasons, the main reason I actually trade on Robinhood rather than trading on webull is because when you put money into your Robinhood account, Robinhood gives you 1,000 immediately before your actual $5,000 or whatever amount is done transferring, and then when the rest is available, you'll see that here too. So right now I have the 1K that Robinhood has provided until the money is being transferred. So I'm still gonna wait it out. I'm gonna wait it out until the money is done transferring. But in the meantime, I have a lot of research I need to do, and I wanted to share that with you guys as I'm doing it, rather than do my research, perfect a video, make sure everything's golden, and then talk to you guys about it. I feel like doing it this way, which is practically raw and more transparent, would be much more effective for many brand new people who are getting started with investing into stocks. I mean, 2021 is going to be a great year to invest into stocks as well. Either way, if we're hoping things are going to go up, then it's a great way to invest before they go up. Or if we think things are going to be going down and some other things are going to be going up, then those are things we want to work towards as well. So right here, I'm going to fill in my table, right? So I have the share name, which is PSEC, right? That's what you would have to search for in any app to find it. The price of the stock, we're going to put just 542 because that's kind of where it's at right now. Dividend percentage is what I care about, right here in this row. So that's about 13.3 right now. So I'm just going to put 13.3% for that. Dividend money-wise, how much is it? Well, that 13.3% is converting into about 70 cents per stock. And the ex-div date, so what is that? The ex-div date basically means that you have to buy stocks before that date to actually get any kind of money back from that stock, right? So if you buy, let's say you buy the stock right now, so this is actually pretty good for us, right? Because we're not past December 30th yet. So if I was to buy stocks today from PSEC, I would be entitled to getting a dividend from them whenever they're going to pay. So they are looking to pay, let me see, they don't have that here. They usually do. Some of this looks a little different on the phone than it does over here. But if I look at it right here really quickly, so PSEC looks like next earnings February 8th. That's what it says here. Is it really not here? I'm going to expand it now. It's just not there. Okay, so it's not showing over here, but I can see it on my phone, so I'll go ahead and put that in. All right, so I don't know if it's quarterly yet. That's something I'm going to confirm later. It looks like it is, but it seems it's going to be 0208, roughly around that time is when they're looking to pay dividends. So this first one is great for me, right? I'm actually pretty happy with this first one because I still qualify. To get the dividend payments for that stock. All right, so PSEC, if I buy a bunch now, how does this work? So let's do a little bit of math, right? So if each stock is a 542, let's say I buy 100 of it, right? So if I buy 100 of it, I would have to spend 5.42 times 100, which is $542. Now, of that $542, I have 100 stocks. So that's the money I've invested, just $542, and I have 100 stocks of PSEC. But for each stock, I'm going to be given a dividend of 70 cents, assuming that the price stays at around 542. Okay, of course, if the price of the stock changes, then the percentage is going to be a different amount now, and it might be less or more depending on what happened to the actual price of the stock. So if I have 100 stocks, how much would I get? Well, for 100 stocks, you would get 70 cents per stock, right? So you just literally do 0.7 times 100, and you would find out that you're going to get $70. Now, this is the reason I'm investing into dividends. Over this year, I've had different businesses I've been doing, through which I've been able to amass quite a nice saving. And if you have money saved up, there are a few things you can do with it, depending on what your life goals are. But for me, I just had it saved in a savings account, and it started to really piss me off what was happening in there, because I had an American Express savings account, which when I opened the savings account, their APY, the amount of money I would get back in 1 year, was 1.5%. So if I have a certain amount of money in that account for an entire year, by the end of one whole year, 1.5% of that would be how much I would actually earn on top of whatever is already sitting in my account. On top of that, the money is just safe there, right? It's just sitting there. That's really not much. 1.5% was not much at all. So if we actually do the calculation, how much would I get back in a year? Well, you could just go ahead and do 50,000 times 0.015. I would get back $750 in a whole year. That's how much I would earn back for having $50,000. That's not anything, right? We already saw that if I hold this for maybe 3 months, right, at just 100 stocks, if I hold this for 3 months, I was getting back $70, right? And that was only a $542 investment. And we're talking about $50,000. So if I actually invested, let's just say for argument's sake, if I invested $40,000 of that into here, right, I would be holding significantly more stocks. So let's actually do the math and see how much I would be holding. So let's just say I invested 40,000, right? So we can take 40,000, divide that by 542, 5.42. So that means I would have about 7,380 stocks of this, right? 7,380 stocks of PSEC. And each stock would pay me 70 cents, assuming that the price stays the same. So we can now multiply this new 7,380 times 0.7, and I would get back $5,166 every 3 to 4 months, assuming, this is a quarterly stock. Actually, I've already looked into how often they pay back their dividends. That's something you can check. And that alone in itself was pretty mind-boggling, right? Because at that moment, I could be getting back $5,000 every 3 to 4 months, or I can get back $750 for having the money in a savings account. That's pretty ridiculous, right? That's pretty ridiculous. So this is something that I've been looking into. This is what a lot of YouTubers that are, more well-known than I am. I mean, I'm new to this. I'm not new to finance and stock trading, but I'm new to making YouTube videos regarding this. But, as a medical graduate, I feel like one of the other things that you need to be good at are how you manage the money you're going to be making, what you do with it, and how you invest into yourself, right? So this is something that I definitely wanted to talk about while I go ahead and do it, right? So as I'm going to do it with you guys, you can see what's happening, and this is basically the research you would be doing. So like, for example, we're going to keep going, right? I'm going to show you a couple more. So T right here, this is AT&T. So let's take a look at what's happening with stock, because that's another part of buying stocks, right? It's not just making dividend. Another thing that happens with stocks is, of course, their price changes. And if you look at this table over here, right, this is showing you something that is pretty obvious, that it's been going up. It's definitely been going up. It was pretty low early December. So right here, we're looking at December 8th. That was literally just yesterday. And then it just started going up a lot, right? It's been going up a lot. And it went up from the $30 that it was at. It was at $30.90. Now it's at about almost approaching $32, right? It's $31.90. So it went up by about $1 right there. And the reason I say a lot is because if you bought just one share, then you made $1. But if you bought a lot of it, like I did a couple days ago, I actually picked up, the moment I sold, so right here is my AT&T. Right, so the moment I sold Tesla, I picked up AT&T. All right, so I bought 100 of it. So let's see where it is. Yeah, I bought 100 of it at $30.87. So that was at this point right here. At this point right here, I bought 100 of it. And then ever since then, it's gone up. right? And that's something that I want to show you guys, not just to win over your trust, because there is no trust here per se, right? It's more to show you that somehow whatever analytical skill I have was pretty effective here, right? It was a good idea, theoretically speaking, for me to sell Tesla at the 645 and then reinvest some of that money into here, right? So you can see basically all the money I got back from selling 6 Tesla stocks went into buying 100 AT&T stocks, because that was about how much I got back. I got back about 3,800. I invested 3,000 into here. Now that was perfect because Tesla at that time was at 645, and if we look at Tesla today, right, I can always rebuy it if it ever dips, right, and it's going down again. Right, I sold this just yesterday at 645 a share, so we can see that right here. Market sell 6 shares at 645. I sold just yesterday, 19 hours ago from today. Right, today is December 9th. You can see it on the bottom left. So that was perfect on my behalf because I sold this and now it's going down. Right, and if it goes down to maybe around 600, I would buy more of it because, as word is on the stock market, Tesla is definitely one of those powerful stock companies that is bound to definitely make its way up, very, very far up, right? So, because right now there's a lot happening with electric vehicles. There's a lot of stocks revolving around electric vehicles that are starting to go up, and you definitely want to look into that as well, because that's another one of those things that's happening at the time. Now, another thing that can happen here is that as the value of the stock goes up, of course, the amount of dividend you'll get back will also go up. Now, looking at this stock right here, their information is pretty good too. So let's put that into the table right here. So we have T as their symbol. The price of the stock right now is 31.60, we'll say, 31.6, right? And dividend percentage is 6.6, practically. And then their dividend money. So how much do they give? They give about $2. So let's put that here. And then their ex-div date, October 8th. Okay, so now that's one place that I basically didn't make the cut, right? So I will not be getting money back. So now you can see why the ex-div date matters. Since I just bought AT&T yesterday, it's already past their ex-div date. So I don't qualify for their next payout, which, let's just check that real quick because I don't see it on the laptop. I mean the browser version of this. So their next payout is supposed to be January 27th, right? Yeah, January 27th is their next payout, and they are quarterly payouts as well. So I'm not gonna get a dividend January 27th because to get a dividend on January 27th, I needed to buy some stocks before October 8th, but I didn't do that. Either way, I was still happy buying its stocks because it was low and it's been going up ever since I bought it, right? So there's 2 ways to make back from dividend stocks as opposed to stocks that don't pay dividends. If you buy a stock that doesn't pay dividends, which is also its own thing, and it's great to do that too, depending on what stock you're buying, then the only way you'll really make money back from that stock is that stock starts becoming more expensive. So maybe you bought it at 30 and now it's worth 100. You're making money back, right? You're making back $70 for each stock you owned on it. But here, you not only get money that you're making because the value of the stock went up, you're also getting dividend payments every 3 to 4 months, depending on how often they pay. Some of these guys pay every 6 months or once a year. And very few of them do that. Majority of them pay quarterly, and at least the ones that I'll be talking about try to pay quarterly. So these are some of the things that you want to watch out for, right? So you can see how doing this research, I'm eventually going to go ahead and put together what stocks do I really want to buy, right? Because so far, all I've really invested into in terms of dividends are these guys right here, right? So we have Gilead. I bought Gilead a long time ago, early in this year, before there was any chat about a vaccine being released. The medication remdesivir was being discussed, right? And I talked about that a lot on my medical aspect of the channel. And remdesivir definitely showed a lot of promise, showed a lot of results. However, it wasn't the ultimate tool. Whatever the reason might be, it didn't persevere as the final answer, but it still worked out just fine for me. See, I personally don't believe in selling a share after buying it if it went down. Like, it depends, right? How much did it go down? I bought remdesivir at $81 a share, right? I bought 15 of it. Excuse me. I bought 15 of it, and now it's gone down by about $20 here. I don't really feel like selling at that point, and I don't need to. Here's another benefit of these dividend stocks right here, right? So if we go down to look at what's been happening, you can see that I've been making back dividends on it. Right? I've been getting back $10.20. I got it in June 30th. Then I got it again at the end of September, basically September 30th. Right? And then I'll get the next one as well. So if we check really quickly when their next payout is. So I'm going to search for Gilead on my mobile app of Webull and look at the information. So it says here that Gilead is paying $2.70 per stock, 4.47%, and the next earning is February 2nd. Right, so I'll be getting another about $10.20 February 2nd. So from what I can see, at least I'm making money back. Right, I'm making quite a good amount of money back compared to what I would get back if money was sitting in the bank at a savings account. Right, so even though the stock value has been going down, the dividend amounts that I'm getting back are helping me cut my losses, basically. Right, and then you can see like 52% of analysts rate Gilead as something that you should just hold. Right, because you never know. Many of these medical stocks actually end up succeeding because of some new breakthrough in new medication they might have made, or a new discovery they might have made to treat some kind of cancer or pandemic. They just skyrocket, right? They just skyrocket, and that's something that you look for. You want to hold on to some of these science stocks, especially if they're cheaper, medical stocks, healthcare stocks, because they will suddenly just surge. Now, there's another one. So let's go back to my list of stocks I own and keep looking at the ones that are related to dividends. So of course now, my dividend list starts with Apple. Apple also pays dividends, and I bought Apple before it did its split as well. So if you don't know, because maybe you don't follow stocks and you're getting into it now, which is exactly what my financial aspect of videos is for, sometimes what stocks might do is they might break apart their own stocks. It doesn't hurt you per se. So let's see like what I'm talking about. So when I bought Apple initially, it was worth a lot more than this amount. So what can happen is that a stock might be worth like $400, and then they might decide that they're going to do a 1 to 4 break, and now each one stock you owned that was worth $400 will be converted into 4 stocks that are worth $100 each. Financially speaking, it doesn't do anything to you. Theoretically, it's not really that harmful either. Nothing bad happens, and if anything, it benefits you in a sense because you have more stocks now, right? And you're supposed to get dividends per stock, not for the value theoretically. But then again, even that doesn't really happen, because remember that dividends are percentages, and percentages don't care about how you break things up, right? So why does a company do that? Well, there can be many reasons for it, but one very obvious reason is that if Apple was worth 400 per stock and now it's worth 125 per stock, more people can invest into it, right? But it's great that it's worth 125 per stock and not worth 400 anymore without having to decline. It didn't decline. It's not like it lost money and the business went really bad and it dropped from 400 to 125. It actually broke itself apart and made more stocks, increased its volume theoretically, and then each stock was worth a smaller amount, right? And that was great because now more investors can come in and invest into it. So that's kind of what happens there. Apple and Tesla both did a split. Apple also pays dividends, right? So you can see right here, November 13th, I got about $3.50 of it because I only own 20 stocks. I don't have that many of it, right? And I'm gonna keep getting more as we keep going, as I keep holding it. I only have 20 shares of this right now, and this is also something that I might go ahead and invest more into later on. Okay, so now before we seal off today's video, I just want to talk about one more stock that I'm going to put onto this list right here. So if we look at some of the more expensive ones on my list over here, right? So let's go down to like Target. Let's look at Target. So Target is a pretty expensive stock, right? Each one is worth right now. Let me 175 basically, right? So let's just put 175, 174.5. All right, I'll put it like that. So 174.5, and if we look at its information, then right here we can see the dividend yield is only 1.56%. Right? And there's a reason for that, because now we're talking about a much more expensive stock. So if they were still giving like 13.3% of their $174, that would be a really big dividend, and it wouldn't really make sense. Why would a company want to do that, right? So that's one reason, it's smaller. The other reason it could be smaller is because a lot more people own it, and there are many more stockholders, and the volume is higher. There's a lot more there to that. The other thing, when I'm looking at Target right now, right, so it was down, it went up, and then it went back down again. So it looks like Target is at a good point to buy, right? That's what you're seeing here. And then, of course, it's already started going back up. You want to, of course, buy stocks when they're at their low, right? When they've just fallen, and then they start showing some green, some hopes of coming back up, so that you don't end up buying up here, right? You don't want to buy it at 174 and then, oh, boom, it started going down. That's kind of something you want to keep in mind for yourself. That's Target right there. Dividend dollars, so you see dollar wise it's still going to add up to something that's going to make sense for what it's worth. You're going to get 2.7, right? 2.7, $2.70 per stock of Target that you own, and its ex-dividend date is 11/17/20, so it's already past that right now, and I would not want to buy this right now because it's a very expensive stock, right? So I'd rather wait out until a better time shows up to buy it. So let's take a look at when they're going to pay their next thing. Their next dividend payouts are expected March 1st. So after March 1st, I'll look into buying it, right? Depending on how much the stock is worth, what's happening with the stock value, is it going up or going down, and so on and so on. And then what their percentage of dividend at that time is. And these are three different kinds of stocks right here, different in price, different in percentage, different in their ex-div date. That will help you understand what you're looking for in terms of investing into stocks that give you dividends, right? What am I going to be going for? I'm going to be going for buying smaller stocks that are worth less money, because I know that a stock that's worth $5, at the worst, what can happen is it can go to zero, which, that's just extreme conversation right here, right? At which point I would just lose $5 per stock. Not insane. But if I buy something like this, which is worth 175, that can go down to 100, and I would lose a lot of money per stock. So I'm not really in a position right now where I'm looking to lose that much. I'm just a medical graduate, just making money off of some small businesses I have and a tutoring business I run. And my forte right now is just education. Mainly, this channel has always been about education regarding medical studies, specifically for the medical licensing exams. But now I'm also going to start talking about some of these other things I've been teaching to a group of people regarding stocks. So, leave a comment. Let me know if this was helpful. Tell me what you liked. Please give me any feedback on what else you'd like me to talk about, any questions you might have. And, best of luck, guys. Keep working hard. Keep looking into stuff. Be careful with how you invest. And always feel free to reach out to me. My information should be at the bottom of this video. Thank you very much.